Hi everyone. Welcome to the Just webinar for this week. We're just going to wait maybe just 15-20 seconds for a few last minute joiners. See if we have a few more people. Hope everyone's had a good week, good last week. We're just discussing how busy it's become for everyone, so we appreciate everyone making the time really. So maybe I think we've got a few last people. So maybe if we start. So welcome everyone to the COVID-19 utilities webinar series sponsored by Just. So we're now on week 3 of the series. So we've had 2 previous weeks. We were just going back to the previous couple of weeks. I mean, the first week we talked very much around consumer impacts, where we had this YouGov data and the survey that we've been commissioned and that Just had commissioned. And so we went through that in the first week. Last week, that was very much around consumer impacts. Last week, we talked much more around the utilities companies' impacts and what that meant for them and how they should respond to that. And really, over the last couple of weeks, had some really great discussion. And I think what really came out of last week was a sense that as an industry, we need to have some sort of standard approach and standard coordinated thinking in terms of how we respond to the events that have been going on. And in light of COVID-19. And so that's what we plan to have as this session and this webinar being and the discussion for this week. So what should those plans look like? What are the criteria and how do we start thinking about how we build consensus? Now, what we did do is we sent out a pre-meeting survey. Hopefully some of you got a chance to be able to respond to that. And what we've used is, so throughout this discussion here, we've used the responses from that survey to populate some of the options. So if you didn't get to respond, don't worry, you'll get to respond again. So as we go through the discussion, just trying to get everyone involved, there'll be polls that come up on the screen that you can respond back to, and then we'll obviously be talking about that on the call. This session here is very much meant to be very interactive. So if you have questions, answers, comments, please do so and do that in the Q&A. And certainly we'll be moving around between the group here as well. So before we start, just a little bit of housekeeping as normal. So the session is being recorded, but it's not going to be shared, so you're safe to ask questions. All the panel members, the guys on the screen, are visible. The attendees, if you're an attendee, you can't be seen or heard. So you're safe to eat your lunch. Everyone's muted on entry, but just for the panel members and the people on the screen, just remember to mute unless you're speaking, and that's just really to minimize background noise as much as possible. And then if anyone does want to interact, just use the Q&A function that's sort of a tab sitting on the right. Any technical issues, just there's a moderator function there, and we'll get someone to hopefully sort you out. But any Q&A throughout this, just use the Q&A function. And you can use that as chat, and we'll pick that up and try and blend that into the conversation. If we don't get to all of the questions or all the comments, what we've been doing has been circulating those amongst the group and then responding back to all the attendees with some answers or some viewpoints on that. So you'll get that plus any of the data that we look at as well after the session. And of course, we're happy to have any follow-up sessions as well. So just drop us a note if you want to chat to us individually. And I say, just as we go through, watch for a series of poll questions. It's meant to be very interactive, this discussion, this session. So please do vote, share your opinion, and join in the conversation. So this week, I'm going to let the panel members sort of introduce themselves. Maybe if I just go first. So my name, again, is Chris Warburton. I'm a principal consultant at Aram. So we're a leading independent consultancy specializing in collections and recoveries, and we offer a full suite of management consulting services. Next, if I go to Nick, do you want to go next? Introduce yourself.
Hi, sure. I'm Nick George-Ellis. I'm the Managing Director of Just. Prior to Just, I was Head of Advisory and Debt Sale for TDX Group. So I've done a lot of consulting and analytical work within all sectors.
Okay, fabulous. Martin, do you want to go next?
Thanks, Chris. My name is Martin Kirby. I'm Head of Credit Risk and Collections at Business Stream, concentrating purely on the SME and commercial market. I've been with Business Stream since the start of the year. Previous to that, I was 3 years with Kier Group, and then previous to that, 7 years with the Deco.
Okay, Fabulous. Thanks, Martin. Jamie, maybe you just go next.
Yeah, so I'm Jamie Waller. I'm the chairman of both Just and Arum. Prior to that, I was the founder and CEO of JPW Group, which is the post-judgment enforcement company in the country.
Fabulous. Okay, thanks. Sandy.
Hi, Sandy Duckett. I'm a Principal Utilities Associate with Arum. 30 years with Scottish Power in various roles, but I also headed up their head of collections. I was 6 years with Standard Life in financial services and 6 years as an independent. Also spent 6 years as chairman of Citizens Advice Edinburgh, and I'm currently working with Bulb Energy.
Fabulous. And last but by no means least, we've got a new member of the panel, Andy Norman. So Andy, do you want to introduce yourself?
Yeah, hi there, Andy Norman. I'm currently an independent consultant, but prior to that, I had 6 years at British Gas where I picked up management of the supply chain that covered the collections functions, so everything from offshore through to specialised debt recovery. And I also then latterly moved on to look after all field recoveries, that's debt and theft. And prior to that, I was in insurance, so financial services for 20 years, where I latterly headed up the collections function for Aviva UK and Ireland. So 10 years, 12 years or so of collections experience.
Fabulous. Okay. Thanks, everyone. So you can see we've got a great panel of guests on the on video. Just looking through the attendees, I know we've got some fantastic experience amongst the attendees as well. So you know, we've got a wealth of experience between all of us on the group here, really to go through and hopefully have a great conversation. So, so we'll just go to the next slide, please. So again, just to reframe the discussion today, you know, very much in week one, say we talked about vulnerable customer expectations, and we had this YouGov data that Just had commissioned, which we'd sent out. You know, week two, we then talked a bit about, well then, okay, we've heard how the customers will interact and what their expectations are. How should we react to that as a utility company and a utility industry? And then really the discussion this week is then really around, you know, should we have some standards around how we do it rather than doing it individually? What should they be? Should there be some standards, and how do we start going about that? So if you go to the next section. So the first topic of discussion really is, I mean, standard hardship plans. I mean, do we think they're a good idea? Or maybe let's just put the first poll up, and the polls are going to be active for around about 2 minutes. So if you're by your computer, please do react. You know, how do people feel about that? May I just maybe Sandy, may I just talk to you, just start the conversation a little bit, just around, you know, how do you feel about sort of standard plans? I mean, you know, and just you know, what would they look like a little bit? You got any thoughts about that? Just to maybe kick off.
I think it's worth considering, Chris. But I think what companies need to be very aware of is the individual circumstances, and I think also they'll need to be much more focused on business customers, particularly the SMEs and sole traders. So I think we need to consider what are the particular circumstances facing, you know, particular groups of customers, because different utilities have actually targeted. So I think we just need to be very aware of that. One that, you know, I like is to actually flex payments in line with, you know, changing financial circumstances. So using, you know, open banking, open accounting to actually monitor, you know, what are the financial circumstances at the moment and how do those change? And key to that is making sure that the customer can afford the payments and it's sustainable, because the sustainability is critically important for, you know, the utilities, and ensuring that they get ongoing income from those customers and they don't generate bad debt.
What about differences between, you know, different types of utilities and consumer and business? And that, I mean, are those are considerations as well? You talked a bit about that.
I think we'll see
What reviews
the
are there?
businesses coming much more to the fore, Chris, and obviously supporting the businesses is critically important because if we don't support the businesses, we're going to find there are far more residential customers who are out of work and unable to pay their bills. So, you know, this is fairly unique because when we talk about vulnerability and utilities, we typically don't think about businesses. We're typically thinking about individuals. So this is unique, and I think much more focus has to be placed on the businesses.
And Andy, did you look like you wanted to jump in there? Did you want to jump
Yeah,
in?
really resonate with what Sandy said there in terms of the SME and sole trader, and specifically if you look at especially organisations who have a mixed book, so both have SME and residential, the connection between the debt that sits on, or the vulnerability, shall we say, that sits on both of those portfolios. Because if a customer on their residential is in trouble and they're a sole trader, you've got to look at them in that way, because if they're struggling on one, they're probably struggling on the other. And I'm not sure how well connected those two portfolios would be within some of the utilities providers. They take a very individual view potentially on the same person ultimately, and if they're vulnerable or financially vulnerable in one, they're probably going to be in the other as well. So taking a more holistic approach to understanding the customer, I think given what we're going to be facing into both as a country and as an industry, I think that type of slightly broader view on their personal impact and position, I think, is going to be quite critical to finding a way through it.
Okay. Yeah, I mean, it's interesting how everything's sort of interconnected, right? And I mean, Nick, we were talking a little bit about your cafe example. I think around that in terms of like how do you start thinking about that, you know, in terms of like future plans and future sustainability of the business. But obviously they've got employees as well, and so everything's kind of interlinked really. That the poll has the poll has ended, the first poll's ended, and so I mean, so it seems like most of us seem to basically think that having some sort of standard plan across the group here, the attendees here, thinks it's a good idea. I think let's just put the next one up, which was what are the ideas on how the hardship plans would look like? So if we just put that up now, and Sandy, I think you talked a little bit about open banking, but maybe just go around and you know, maybe just go around just in some like what kind of standard hardship plans do you think there would be? I mean, and Martin, do you want to maybe just pick that up and just like just your kind of thoughts, particularly with the business spin on it as well? I mean, what should our approach be around hardship tariffs?
Okay, thanks, Chris. Definitely for me, there has to be the starting blocks, which is the default plan, which many of the utilities are doing, and certainly we are, which is offering the initial deferment while organisations, small businesses, sort themselves out and understand where they're going to be at the next stage. I think that the more tricky point is now, because we're going through that process. What we really need to do now is really start and get that engagement piece going, because you know we will all have huge provisions appearing on our balance sheet for COVID that we will need to sort of fully understand over the course of the next 2, 3, 4 months. So to me, I think we have to really start to plan and understand how further we can push that out. Now, most organisations will want to try and do that within a financial year, I suspect. So is that 9 months? You know, in our case, that would be sort of 9 months. So we have to get the deferment done, which I think we're there with that. We then have to really change that engagement model. And I think this is a real big sea change for credit and collections or collections model. No longer can we just keep sending, you know, that chase reminder or that reminder. We have to work out how to get engaged with that organisation in whichever way we can. Because only when we get the feedback from that organisation will we be able to then plan for the rest of that season or the rest of that year. So initial deferment and then fully understand. I'm a 100% supporter, as Sandy mentioned, around open banking. If you want to work with our brand, then there has to be open and transparent communications between both organisations. And to me, open banking gives you the fulcrum and the fundamentals of that openness. It means that we don't have to get involved in statements of affairs. It means that we have a third party that can deliver us those key data points, and we can together work out what that looks like. So that for me is where we're at, and I just hope that we can do open banking fast enough in this climate as we start to exit out.
And I mean, how evolved do you think it is? I mean, so I know it's been talked about for a long time, open banking. I mean, is it but it seems like that at least the initial rollout has been tricky. It hasn't been as fast as certainly the open banking companies wanted to since it went live. I mean, do you think it's picking up speed? I mean, what's been the feedback there? Is it getting easier? I mean,
yeah, I've seen it live, Chris. We have an internal process to try and adopt it. I've seen it live. It's very straightforward. It's as simple as an email to the customer. The customer then would agree online to supply that information, and then that information is generally collected in two ways: A, from open banking, which is there, or B, from his accounting software. So if he's using one of the predominant packages, I think it's there. Obviously, there's a certain amount of cadence required to get it underway. I've seen it; it's really powerful, and I think the fact it's been around the finance piece for a while means it is pretty much tried and tested as well. So it's just trying to get that adoptability and people to be agile and start to adopt it, start to use it.
And Chris, can I just come in there, Sandy? I think what's truly important, back to the engagement piece, is in banking, customers need to trust who they're dealing with. And utilities, by having more engagement rather than just cold, sharp letters, more engagement will build that trust. And I think that's easier to do within the business community than the residential community, but the reality may turn out to be different. But utilities have a real opportunity to change the image that the public have.
I think there's also a question around integration. I would think as well, right? Which is, if you've got lower volume accounts, maybe high value with less accounts, you can look through some of the data manually. And if you've got high volume of low value accounts, let's say more on the residential side, then integration becomes even more important as well. I don't know if that's a fair comment, or how you feel about that. And just is that another illustration of the consumer versus corporate type split, or the business versus residential split?
Chris, from my point of view, I think open banking, the tool to get the data, has been around a while now and is easily accessible. I think the use case of let me use that when making lending decisions is now proven, because they've got the rule set on how to use that data. I think what we're discussing here feels like there's two parts to it. One, will you get access to open banking, so to the data? And I think the important part is post that. So what do you do with all that data? You will get every transaction within a company or within someone's bank account. And for me, I think we're going to talk about it, but it's how do you set the parameters? How do you review that data, and how do you set the rules? Because that's what you do in lending. You have some criteria. People will pass, fail, or be referred for a manual review. I think exactly the same thing needs to happen within this part. Set a set of rules, make them quiet. You'll have them at the start. There'll be quite a lot of manual referrals, but as you build up experience, what you do is you tweak the analytical rules to reduce the manual referral. But to Sandy's and Martin's point, at some stage there's lots of companies where there are some nuances and it will need a manual review. But over time, you will build the rules, because a person makes a decision. Once the person has made a decision on that data, you can codify that. But if you've never codified it before, you can't, and you just need to capture and learn how you're progressing your tool set, your decision logic through this, I think.
Yeah, and I suppose, so it sounds like the implementation initially, you can look through the account. I mean, that's what collections analysts do. I mean, we do that anyway. And then what you're talking about is then the integration around, then how do you build triggers and rules around that, and that's the extra layer of sophistication that we carry on building, right? Is that what you're saying? So this isn't just a one-time thing. It's also something, once it's in the market, it's something evolves over time. potentially.
For sure, as people get more comfortable with it, you'll be codifying your mental logic.
Okay. I mean, so just going back to the poll here, because we're getting into like what tools are best. I mean, it seems to be that the discounted pricing and locking in discounted pricing seems to be the preference around standard hardship tariffs. I mean, the other one that comes up is other. I don't know if we had any feedback, or maybe just put it in the Q&A if you voted other, and what that would look like. So definitely, reduced pricing, getting it locked in to get the reduced pricing. But it'd be good to just if people had other ideas of other things maybe we haven't talked about. I don't know if anyone on the panel would see other potentials that come up from what a hardship tariff would look like.
Yeah, Chris, it's Andy. If I can just come in there because actually I was one of the other. Because I'm not personally sure that what's on there is the right. For me, it feels like yes, it is probably some sort of discounted modelling, but something that I myself was reading some stuff about what some of the water companies have been doing to try and address some of their debt challenges, and United Utilities is one of the specifics, and they're doing sort of payment matching, which is, I guess it's not discounting, but it is looking at customers' individual situation and sort of doing a matching type of principle where as long as the customers contribute, it's a bit like your pension, I guess, isn't it? It's you're contributing towards the debt and it's being matched by the organisation. So it feels like there's sort of skin in the game for both to be promoting that type of you continue paying and we'll continue to principally, I guess, write some of the debt off is ultimately how it will, see itself finding itself through the financial model. But it does feel like it's a commitment on both sides, which, going back to Sandy's point around trust, I think can really help the customer think, actually, you are trying to help me here, and it's in a really tangible way, which then might allow for things like we were talking there in terms of open banking. If you build that trust, you build that visibility of you're helping them, there's, on the residential side, there's probably more opportunity for them to be more open and transparent with their current financial situation. So I think that piece around flexibility for me is quite important, because individual people's financial position will probably change quite quickly in quite a short space of time as we go through this this transition and removal of the lockdown.
That's quite an interesting idea in terms of. Go ahead, Nick.
Sorry, I was going to ask a question now, and you pick out one company there, which I think is telling, which is, and if someone's in hardship, it feels like it shouldn't matter who their provider is, that it's more of a actually something that you guys all agree together. So I'm not worried. It's probably less relevant with water because I can't change. But if I'm in hardship, I don't want to be worrying about who's got the best hardship tariff and who do I move around to. I probably want the industry to agree something and look after me. So I've got one worry, which is how I get out of my debt, not how I get out of my debt the best by shopping around. Do you think that's? Okay.
Yeah, so I think it's an interesting idea in terms of, and I was thinking as you were talking a bit about, but financially the outcome might still be the same, either writing the debt off, discounting it, so you're basically from a revenue point of view, or doing payment matching. I mean, the net impact might be the same, but is there a brand impact for that in terms of does it matter which one? Does it matter which company you're with? But is there a brand impact from maybe presenting the same thing differently by doing matching? That I thought was potentially interesting. I don't know. We talked a lot about brand on some of the previous calls. So we just put up on the screen now around hardship tariffs and whether customers have to prove themselves to be in that situation and go on, say, one of these hardship plans. Maybe just people will vote on that. And Nick, I think you were just trying to jump in.
So you were talking about brand there, and I think people in hardship should be brand of the utility sector, not brand of the company. It shouldn't be a place where companies are scoring brand points when someone's in hardship, because that just confuses people. And I think it'd be great to get some form of agreement across the industry to say we're not going to play a brand game for hardship cases. We're going to identify these cases, and we're going to, as an industry, find the way of treating those appropriately.
Sandy or Martin or Andy, is that realistic?
I think.
Go on, Martin.
I think the natural thing for people to do will be to give their loyalty to organisations that work with them through the process. So I agree with Nick that we shouldn't really want to trade this across the brand. But I think you'll naturally get people, if you can assist your organisation through this, I think they'll naturally become more loyal, and I think there's a real value and a power to that. I think if the industry wants to do something with regards to this and manage it centrally, then there must be a way of a vehicle to push all the hardship cases into one place and then deal with it in a central way. And I guess that would take a fair amount of logistics to get that done. But so I think definitely brand loyalty. And is there anything more we could do from an industry perspective to grab all the hardship cases and deal with them in a standard way?
Chris, I think there's also the potential to have a levy on bills, because we've got levies for renewable energy, etc. Just a small amount where it goes into a fund that is used across the industry. We see levies in any number of industries, airline, pension, etc. So we could potentially do that, because those that can afford to pay their bills, if there's an extra 1 or 2% there for a period of time, that goes into a hardship fund to support businesses and individuals subject to certain criteria being met, then I think that'd be a good thing.
Go back to the financial crisis back in 2008, around almost like ideas around the bad bank, where you'd centralise all hardship cases. It seems like that's same kind of ideas coming through, or levies as well. And does some of that it depend on economic situation in terms of how bad it gets, or is it something we can sort of push now? Do you think? Is it going to be dependent on worsening of the economic situation, or is it something we can push now?
Well, if I look at what I suspect is going to be the bad debt exposure across utilities, I think the next 12 months it's likely to exceed £1 billion. Now, that will be a combination of people who are vulnerable, who don't have the capability of paying, but a significant proportion will be people that can afford to pay that choose not to pay, and therefore the industry has to do something to sustain people's ability to pay. Otherwise, those companies will be facing real financial hardship themselves, the utility companies. In 2018, the average profit margin was 2%. There's figures just been released on 2019, and the average loss is 2%. So it's moved 4% in the space of 12 months, and we haven't even, the impact of COVID isn't in those numbers. So it's really important that the industry come together to agree how they're going to deal with this, because we want to have dialogue and engagement with customers who are contacting us, because those are customers that are prepared to pay. Those that are trying to avoid a debt tend not to contact you.
I think Sandy has a great point there, and we've got to take the distraction away, because we've got plenty to do in these organisations to push this industry forward. And I think the coming together, if we can do that, would be ideal. So I would say, why can't we do that now? Why can't we bring all that together and factor that as the ideas are today? Because we need the distraction away. We need to push our companies forward, and we just need to understand how this is going to get dealt with.
And do you think is it less overhead if we do it as an industry now versus waiting for the regulator to do it? Views on that, or?
In terms of overhead, I couldn't really comment on overhead, Chris, but I think it's more likely to move at pace. And I think the utility companies, if they structure themselves correctly, they're more knowledgeable about their customers. They're more knowledgeable about, what will work going forward for both them and the individuals that they're servicing. And I would reinforce this point. We've got to make sure that those companies can actually move forward as well, because if the situation gets really severe, some of those companies will not be in business next year, and therefore there'll be less competition, less choice for customers. But I really do believe that the industry, not just energy, utilities, because there's a lot of collaboration required and benefits to be had across water and energy.
It sounds like an opportunity for us to be in the driving seat, really. I mean, that's kind of coming across. Just going to the polls just real quick. We had another couple of polls up. So should hardship tariffs be only available if customers can prove their situation? So that was a clear yes. So there should be some sort of proof. Question 4 was interesting. We just put up question 5 just while we're talking about this one, if we can. So question 4 was, which tool should be used to then prove hardship? So I mean, it looks like open banking came up, towards the top. So we've talked a bit about open banking already. Open accounting, I suppose, similar in terms of access to chartered accounts. Credata, other again, is we've got a couple of people who had other. I don't know if we've got any insight on what other might be as well. Any thoughts on other tools that we can use to kind of prove hardship? Anyone here vote other? Or if anyone in the group online, just drop a note back on Q&A as well if it wasn't one of the group online. Any views on the best tools? I mean, open banking, I think we talked about. Anything else that we think we should add?
Chris, it's Andy. If I could just sort of jump in there. I guess I'm sitting back and just thinking, from trying to put myself in the customer shoes, as we all are. We are all customers in this period as well, some in different situations to other. But I'm one of many people that have taken the opportunity to take a payment holiday on my mortgage, is a great example, which I think is another solution to helping people through a very difficult financial position. And the approach that they've taken is to Nick's earlier point, consistent across the whole of the market. If everybody has to do it, the individual way that each supplier does that is then tailored to how they want to deploy it. So I think there's an opportunity to use both of those. But if I look at the journey that I've gone on from a customer perspective on having to prove my ability to take that holiday, I didn't have to prove anything, which is quite interesting. Obviously, in the background, I would assume there's some sort of validation check they have done. But, again, it comes back to that point of building empathy with the customer, trust with the customer. I'm asking them to prove the fact that they are financially or mentally or whatever vulnerable. It is quite a difficult conversation to have with a customer, given the circumstances they're under. So making that as easy and as less process as possible, I think, is going to be quite key to, again, building that trust. Because if you're having a conversation with a customer that's saying, I'm struggling to pay my bill, and then asking them to justify their financial position, I think will be quite a challenging conversation for some of those customers who are already struggling. So just thinking about how to do that, and I'm just conscious that in a world like that, whether it's a conversation about open banking or proving that, I think we all need to think about how we would approach that conversation.
Any other views on that, in terms of, I suppose, self-certification? I think is kind of some of the stuff that I'd paraphrase some of that stuff as Andy, which is like the banks have got self-certification. You do it online. You say, yes, I'm having financial difficulties, and then that will flow through to, potentially in this case, through to tariffs. I mean, any other views on that? Does that make sense, or is there concerns around that, or?
I have a few concerns, and they've been documented in the press, which is you give blanket things available to everyone, people will take them, and actually some people, it can put them in a worse position. So they could probably afford to pay their bills on a monthly basis, scrape by on a monthly basis. If I give them a blanket holiday, and it is a holiday, it's still is accrued and has to be paid at the end of those holidays. So it's not writing it off. Does that person has then got some debt that they might not be able to get over? So I think there's a fine line between making it easy and making it appropriate. I've not got the right answer, but I think it is a use of data, and it is trying to make the interaction as easy as possible. I suppose my question is a self-serve. What evidence from some of the payment things in debt collection is people happily engage with self-serve things easier than they don't like talking to an individual about financial hardship or hardships because there's a social embarrassment to the conversation. So I wonder where the line is between self-serve proving it or demonstrating and actually just applying it, if you were.
There's almost like self-certification online, interesting, Nick, and self-certification on a telephone call, right? So what you're saying is, and the barrier to self-certification on a telephone call might actually be a little bit higher, and there being a bit more of a test on a telephone call than would be online, as an example, which is, let's take a very simple example of just being a tick box online. That would be maybe the lowest barrier. I don't know, but then you can obviously overlay that with barriers with things like other questions you might ask, and I suppose it's just where would you draw that line, I suppose?
I think the thing that we're not talking about, and actually the elephant in the room often, and I've had this with some conversations I've had recently, is people saying people are going to take them. If you set something, some people are going to take the mick out of it, and some people are going to exploit the process that you're in. And I've had actually some people take a very hard view on that, and I think their view was inappropriate. But I suppose my question to the panel is, the rest of the guys, is how do you get the balance between treating people appropriately and not costing the organisation, not opening a floodgate of people that are exploiting situations?
And just David online is just one question here is making a good point around mortgages are charging interest on balances, so earn more once it's paid. Whereas I think in utilities it says, well, we need to know we're a priority payment first. So is it going to cost more in utilities than, so the banks will earn the interest as well. So I mean, is that another revenue aspect as well?
And Chris, just another factor is that the banks, when it's mortgages, they've got security. Utilities don't have any security over that debt. And also, the debt continues to increase. So it's not just interest that's increasing, it's actually the cost of the service. And therefore, if we don't get the balance right, we actually create greater problems in the future for those customers. Unless someone decides that money's got to be written off. If that money's got to be written off, then some of those utility companies won't be in business in the future. Then that's not, in the interests of the UK economy.
And
certainly, Chris, we've not been allowed to charge interest or any sort of charges around that piece since COVID. There's an easing of that restriction prior to COVID, but for the last 6 weeks or more, that certainly wouldn't be able to do that, and going forward until we understand what the landscape is. So, utility companies are taking the brunt on this. I think as well, I'm not sure it's going to be so easy to to differentiate. I like the self-certification idea that Andy talks about, and I think the self-certification to me is probably one that we have to take. We didn't see a lot of people. We saw some people cancelling their plans and cancelling their direct debits at the beginning. That to me has leveled off. There was an initial spike and then that's back down. So people are still wanting to be responsible and pay. So I think we have to just make sure that that's really a slick process, as we've talked about. And I think there's a lot of synergy as well, because I support it in open banking, that openness to say, go there, click there, say yes, and then I've got the information and then I can make that decision. So I think we just have to do it quickly as well.
Chris, if I could just sort of try and connect some of what I've heard, actually, I think what Nick talks about in terms of the use of data and some other conversation, connecting that with a tailored conversation with the customer. So that contact process, I think, is really critical. So you've got a dialogue with the customer around their situation. So you're connecting data with conversation and making sure that's tailored to the customer's needs, whether that is through self-certification, whether that is through putting the right solution in place for them. Because every customer will have a slightly different position on this. Some will be able to afford to pay and can pay, some won't. So I think that contact, which we probably haven't talked about too much in terms of, is there a different method of contact? Nick talked about online, which through, when I was in British Gas, we did a lot of work about getting more customers to go online, because they do tend to be more open when they're doing it themselves rather than through a voice conversation. So I think it's that use of data to identify solutions, having and engaging with that customer, build the trust, and then put the appropriate solution in place feels like the approach that, if you look at pre-COVID, was what a lot of organisations were doing with customers to try and resolve debt. Is it really any different now we're in a COVID world in terms of, yes, there's more of them, but actually the approach that we need to take is the same. We just need to identify those customers through data that may well have been affected by the COVID situation.
Chris, it's Sandy. I also think that more focus.
1 second. So can we just put up question 6, okay, just while we're talking about data access? Definitely comes up as you just look at the polls there in terms of qualifying criteria. If we just put up question 6, and then we're going to move on to proof of hardship next. But Sandy, jump in.
Yeah, just more focus needs to go on energy efficiency advice. So if we cut the demand, the debt isn't as great going forward, promoting how best to use smart meters in that respect, and also finding the best tariff for each of those customers, whether they be currently in a vulnerable situation or, just a customer. So what can we do to actually reduce the demand and get them onto the tariff that's better, for them, based on their usage and their circumstances? And we could also, with DD tariffs, typically customers at this point in time are starting to build up credit balances. So could we flex, the algorithm to reduce those for a period of time so the customer recognises we're doing something to help them, but at a future date we will need to increase that direct debit. So we still get ongoing payments, but not to the level they were set at.
Reduce payments. We just put up on question 6 around pre-arrears has come up. So people can't contact a utility company before they're in debt. So they're not in arrears yet. I think I'm going to have problems. I'm not quite there yet. I mean, is any thoughts around that in terms of? Sandy, you just talked a little bit about moving to better tariff. I mean, should that be done proactively before they're in problems, or should we wait until they're in debt first? And is there barriers or hurdles that need to be passed to determine when people should be moved to different tariffs, as an example?
I think it's Chris. I think it's back to points that Andy and Martin made. Proactive engagement. So why wouldn't we have the engagement on those tariffs, on energy efficiency, on smart meter right now? Consistent messaging to those customers to show we're trying to help them with managing their energy consumption and ultimately their debt.
Okay. Any other views, or definitely being proactive? I suppose there's a cost that goes with that in terms of talking with people, and I suppose how do you manage that cost as well? I mean, how much is digital versus talking with people? And I think talking with people, you definitely get that interaction, a greater level of information. But do you think you can do it online, or are we back into the self-certification discussion again? Payment plans and better tariff definitely comes up as the top answer. It's just closed now, but Nick.
I quite liked Sandy's. It's interesting that if I've got a current account and I get my salary paid in every month. There's people in credit and the people in debit. What a lot of utility firms do is, and I do the same, is you pay monthly and you're often in credit. I wonder if there's almost the overdraft style concept for a period of time that you allow people to have within their plans and direct debits. I hadn't thought of that prior to Andy talking, but if you think it's a temporary situation, letting someone run an overdraft as long as they're making notional payments in there might be the right answer for them.
We're just going to the second slide in terms of proof of hardship, which is kind of related, and we just put up question 7 on the poll. So we talked a bit about having the conversations and having that engagement. What are the pieces of information that we should gather now? Are the pieces of information we should be proactively trying to gather now? What information do we gather now, and is there anything else that we need to gather that's going to be new, right? So, any views on these? So I think some of these we probably already gather, but is there anything that could be indicative that we could be useful down the road?
Sandy, one of the things that is available from many energy suppliers is how your consumption compares to the average property of your size. So again, through simple messaging, online, emails, SMSs, just simple messages to prompt people to check this, check that. Do you know that your consumption is 20% higher than the average household? So that it just prompts people to think about it and take action.
So smart meter information might be certainly a category under the other, right? So in terms of is usage going to change? Is that going to change? Is that indicative that might help with some of those conversations? That's interesting. And the nudge piece I think you just talked on there, which is how do you compare versus your peers? In your neighbours or your similar businesses like you, those kind of things.
I was going to ask Andy a quick question of how the industry is, because actually what we're hearing is more people are spending time at home and their consumption is going up. At the same time, they're probably getting a little bit less income, and their historic direct debit probably doesn't cover future consumption. How's the interest? Is the industry looking proactively like they normally do, which is actually, I've seen consumption in a couple of bills, I'm actually going to up your direct debit now because you're at home more. How's the industry working on that at the
moment? I'll give you my view. I think a lot of activity has been ceased in terms of reacting to a customer's default position. I think a lot of organisations are still working through, and I'm sure Martin and Sandy will have a view on this as well, in terms of what is appropriate in terms of trying to do that customer for a change in payment behaviour. And I think that's the important bit here. It's either a consumption change or a payment change are the two trigger points. Now, I think it's then creating a conversation with those customers to understand why that is and what can be done, whether that's a change in tariff, because a lot of people now, as we all are, working from home, that will change a change in consumption. That might mean that actually the best solution for that customer is to change plan. It might be that they've been put on furlough. It might be that they've lost their role. So I think it's that using those trigger points, to your point, Nick, that you've seen a change in consumption, and then it's working through what that correct next action is to engage in the customer, whether it be through some of Sandy's messaging, through email, through whatever communication method. It doesn't have to be necessarily a phone call, whatever the appropriate channel is for that customer, to get them to the point here, which is give information across to the utility provider to allow them to have an informed conversation about what the situation now is, and also potentially what the situation in the future is. Does that position look to be changing in the next few months? Are they going back to work? What is the situation in terms of their personal situation, and can they manage that for the short to medium term?
So I'm conscious of everyone's time here, and we've got about 10 minutes left, and I don't know if we just put up questions 8 and 9, so sort of link through to that in terms of like putting people on hardship plans is, the next couple of questions are then really around if you're on a hardship plan, how often should that be reviewed? So is it triggered? Is it on a time frame? And then the last piece was then a piece just then really around field collections as well. So when should we use that sort of further down in the collection cycle? So maybe we'll just put those polls up and have a bit of a chat about that. The other thing I'm conscious of is Jamie sitting there in the corner, and it's not that Jamie doesn't want to say anything. You can wave, Jamie. It's I think your Wi-Fi has got the message. Your Wi-Fi connection's a little bit ropey this morning, so he's been pinging me all the way through to make sure we've had input as well. So it's not for want of not wanting to say something. That's for sure with Jamie. So if we put those plans up there on questions 8 and 9, I mean, what do we think in terms of like, hardship tariffs? How often should we review it? So we've got someone on a hardship tariff, they've qualified or haven't qualified or self-certified. I mean, how often do we need to go back to it? Every 3 months, 6 months, 12 months? What are the kind of views? I think,
Chris, I would tie it, most companies will do quarterly DD reassessments. I would tie it in with that sort of timeline so that you're tying it in with, our customers keeping up with the agreed payments, is their consumption moving? So have that continual dialogue with the customer, again, through simple means like SMS to even positive messages or messages that ask them, other circumstances changing. So that engagement, if it's done in the right way, can start to build the trust, can start to elicit, feedback from the customer that then tells the utility whether there's a requirement for a call to the customer. So instead of dealing with inbound, you reduce the inbound contact through, proactive engagement through a digital channel.
And it is that engagement, I suppose, and you're getting that customer interaction right as well through all of that and gathering even more information. And the other thing that's coming up here is can you do that from a data-based approach, right? So we talked a lot about open banking. That might be a way of doing it too, or does it really need that core? Martin and you're both advocates of open banking. I mean, would we want to do both, or does open banking reduce the need to have a frequent call every quarter?
I think, Chris, it stops it. I mean, open banking would be refreshed, and you would be able to make a decision based on a logarithm that you've got in place, given the categories that you draw down. So I'm not sure there would be that much of a need to push back. Open banking certainly would tell you in the model that I've seen, so there would be more a check on open banking. I think back to Sandy's point, quarterly sounds a good idea. I think practically without open banking, that is probably more like 6 months, I think. And if you look at some of the government statistics, the organisations that are still trading say that they, 50% of the organisations trading say they have cash reserves see them through the next 6 months. So all that sort of ties into that piece, really. So that's where I would see that.
Okay. And tell how you voted, maybe. Nick, were you going to say something?
I think actually that it's a combination between some of the discussion that's had here, which is there's people in lots of different circumstances, and the review period for different people will be very different. Appropriate will be different time periods. And I think this is I'm a great believer in data analytics, so it should be information led. Now, whether that's they self-cert every few weeks, or they say when their situations change, whether it's you use open banking. But I think actually, if I was to offer a person, I'm going to give you another call in 4 weeks, or you can give me open banking. It's nice to give people the choices. Some people like talking to us. Some people don't ever want to talk to us. And I think having all of the tools to let the customer choose, but I definitely would make it event or data driven rather than a standard time driven. You might have different review periods for different situations. I wouldn't have blankets across, especially in the current environment.
Okay. Thanks, Nick. So we're almost out of time, and we just got the last question around field visits. And I was just going to ask Andy, just with your recent experience at British Gas in terms of running the field teams, especially. Do you want to just pick on that first? Any thoughts around that? Around when should we be sending people to properties in the new environment? And then we'll just quickly wrap around and see if there's any other views just before we finish. And do you want to take that real quick? Looks like people are saying no contact, reconnect.
Yeah, I'll be really brief. I think there is a place for field contact. I think it is a place where it's deemed as something slightly different, not knock on the door to recover debt, but knock on the door to have a conversation. It's just another route to have a conversation with the customer. And actually, interestingly, just before I left British Gas, at the back end of last year, we were trialling more customer-orientated visits for vulnerable customers. So similar type of scenario to this, but it was pre-COVID, obviously, where we were doing debt counsellor type conversations with the customer around their personal situation. So customers that had ultimately buried their head in the sand, and we were there to try and support them. So we weren't sending a typical debt rep to the door. We were sending a customer agent from an actual contact centre to go and do a physical face-to-face visit to help the customer resolve the situation. So I think there is a place for it, but it might cause some of the DCAs and other people that do those type of visits or in-house staff just to think about the skill and capability of those people and the nature of the visit rather than what we would all probably sitting here thinking as a typical field visit. That would be my position on it.
Any other
same for me, Chris. Same for me, Chris. I absolutely concur with Andy's saying. It's the plan that we're doing. We need to get those visits underway. It's not the standard old visit. It's a different visit. It's more a customer service visit to understand, are they still trading? If they're still trading, where do they see the outlook? So it's a completely different visit. It took a lot of retraining, but totally agree with Andy. I think this has to be part of our toolkit, certainly in the next couple of months, and we have to get out to the businesses that we know or we're not sure about and get that done. So 100% concur. That's exactly what we're going to do.
So just to find, so Nick, I don't know if you just with your Just hat on particularly, just have you got a view on that, or you just sort of concur, or any thoughts, or?
I think it's looking for alternatives, because I think in all of these situations, what's the most appropriate action, and how are you giving people alternatives? At certain circumstances, for certain situations, you'll need to send someone out. But have I looked at every realistic alternative before I do that? And I think getting the balance right on that is right. And I see the polls coming up with no contact, reconnect. So if someone's not engaging with you, then it probably is the only thing that you can do. So you have to do it. It's not through choice. You'd prefer not to go all the way down that route. You prefer them to engage. Give them every opportunity to engage, and it's the end of the road option.
Okay. Well, very interesting. So I think we're pretty much out of time. We did have one question that came through that which we asked halfway through. I think that just the close on this is just where do we take this from, and maybe this is something we need to ponder. So, you know, we'll circulate out some to get some feedback from people in the audience. I mean, so how do we take it forward as an industry working group? You know, do we need to have a sub-working group? Who, where, and when? What would we do that? So it'd be good to get some feedback just from the people who attended today, just in terms of like, is that something we should do? How should we do it? If someone wants to put up their hand and sort of get more involved, then absolutely please do so. We'll be, you know, happy to have that conversation, and you know, we can start facilitating some of that, because I think definitely it feels like there's an opportunity to have more standardization out there in the market, and I think, you know, thank everyone today again for a great conversation. I think we've had some great dialogue and interaction between all of us. So it's been, and some new ideas definitely have come across that's been very, very informative. So I'd like to thank the panel members for all their insight, the input. Thank you everyone for attending. If you want to volunteer or if you want to get involved a little bit more as we take this forward, please just drop one of the team at Just a note or myself, and we'll definitely get you more involved. So thanks very much, everyone. Have a great rest of the week.
Thank you. Bye.
Right.
Bye now.
Thanks, Chris.
Bye.
Thanks, everyone.
Thank you.
Bye.
Thank you.